Ladies and gentlemen, Christopher Aaron here. It is August 22nd, 2019. Welcome back. I'm here in the iGold studios. It is a pleasure to be back. It has been several weeks since the last video. There have been a number of things going on for me, but I'm glad to be here, and I'm glad you are here as well. And why am I excited about this video? It's because when we look at the silver market specifically, we are seeing an important trend break in the silver market. Now, you know me, you know that I'm not one that is prone to hyperbole. After all, we do see in this industry individuals claiming that gold and silver are about to skyrocket every week, and they've been saying the same thing for the last 10 years, and so doesn't that get a little bit old after a while when we see that actually not happening? But that's not what I'm saying. I'm saying that we see an important trend break. And I want to show you the ramifications for that because I do suspect that it means higher prices coming ahead, although I am not 100% convinced that this is the start of a new bull market. Let's take a look. Now, the focus of this channel, if you are new, is a form of technical analysis. And we do this technical analysis by focusing on price and price alone. So what am I talking about this? Price and price alone. We analyze price. And if you actually boil it down and think about what is most important to you as an investor, whether it's gold or silver or the mining stocks or whether it's anything else, the value of the dollar, stock market, what else matters more than the actual price and what is going to happen to the price? So this form of analysis attempts to admit that. I mean, yes, the coins can be beautiful. And yes, there are important factors about personal sovereignty and about having some security outside of the banking system. I completely agree. But if the price was not going to move in our direction, and if it was going to move lower, let's say for many years, I'd say 99% of people wouldn't care about those fundamentals. So we study price because we admit that we cannot know all of the fundamentals as human beings. It is impossible. What can we know is what are the trends in the actual price of the commodity and when do those trends change? And so when we look at silver from 2001 through the present, let's call this is almost a 20-year chart now. 2001 through the present, and we'll bring up this handy key. Because if you're new to this, please pause this video right now and study this key, what everything means here, and you will understand this system. It can look like a lot compared to certain forms of analysis. It can also look quite simple compared to certain forms of analysis. What I have found is that the simplest forms of technical analysis focusing on price tend to be much more powerful than all those derivative forms, moving averages and MACD and various momentum indicators. We focus on price foremost here. Now, the most important thing that is happening to pay attention to in the silver market is this long-term magenta trend, okay? So focus your eyes here on the magenta and go all the way back to 2003 when silver was $5 an ounce. And notice how silver started to begin to move higher. 525, 550. And then notice this acceleration. It looked like silver was really getting ready to move up to $8 an ounce, but it fell right back. And notice how it found support just about 20 cents above this trend that had began a year prior. And so we had a market that gyrated within 20 to 50 cents above a new trend line. And it looks like in 2005 and especially in 2008, when silver got to $20 an ounce, it looked like this market was really ready to take off for the moon. But what happened? The crash of 2008, silver fell by 60% in the crash of 2008. By the way, I'm going to interject a thought here for you. If you're one of these people who thinks or wants the stock market to crash so that silver can skyrocket, I will tell you silver has an extremely poor track record of how well it does during stock market crashes. The last major one, of course, being right here, 2008, silver fell just as much as the Dow. So be careful what you wish for. Sometimes, when does silver do best? After the stock market stops crashing, and then silver tends to receive the inflationary benefit after that. But notice how during that crash of 2008, when silver fell by 60%, it bottomed right at this same trend line right here. I mean, isn't that incredible? You know, going all the way back 5 years now, after the run to $50 an ounce and the 75% drawdown into 2015, where did silver bottom? Once again on this exact same trend line. If you're trying to tell me that this is random, you know, that all these major collapses and surges and collapses could be traced back to this one trend line, I've got some absolutely pristine oceanfront property that I think you should take a look at. It's located in the beautiful state of Nebraska. So we bottomed here in 2015, surging. Notice how the flash crash in 2017 touched this line, broke below it by about 24 hours. Now, a critical thing happened here in 2018. The market finally broke this long-term trend line. It was a 15-year trend for good. Broke down, notice, negated on the retest right here. But something very interesting is happening exactly now as we speak. I think you should pay attention to this if you are investing in silver or you're thinking about investing in silver, because I think the technical action that we're seeing right now is setting the stage for a significant move. I will say significant at this point. Now, some of you may be saying when you're looking at some of the trend lines here, this is just a side note, oh, well, you forgot to draw in the trend line from the absolute peak. You've made that point before, Chris. You forgot to draw that. Well, here it is for you. I just left it off because I didn't want to confuse the chart. And so you can see that trend line. You can see secondary trend lines. You can see the trend line from the 2016 peak. I just left those off because I'm trying to focus on the most prescient lines that we're looking at this exact moment. Okay? So let's bring it right back here. The important point that we're talking about is the recovery of this 15-year trend line and the simultaneous breaking of this blue. Notice the blue primary trend, this blue downtrend here, basically happening within 2 weeks of each other. These lines were very close to one another. We've broken both of those trends. Now, the closest, technically speaking, the closest trend break that we've seen to this one, going back for the last several years, was right here, right in the beginning of 2016, when we broke this terminal wedge. And you can go back to the archives of this channel, by the way, February of 2016, and you'll see we were talking about that at exactly that point. And it doesn't mean that silver skyrocketed immediately, but we certainly had a pretty nice move that was setting up for the next 5 months here. And remember, some of these silver miners rose by 200, 300%, even in the last 4 or 5 months of this move. So here we are again at a very similar junction, having recovered this long-term trend, which is incredibly significant. Now, let us zoom this in to just the last 3 years or so, and we'll see what's happening with a more fine-tooth comb. Okay, so there was that long-term trend line we were talking about, the magenta trend right here. Notice, so remember, this was coming all the way back from 2003, bottomed, broke down, rejected, and here we are. We've broken through the primary downtrend, which began all the way at the 2017 peak, and this trend from 2003 has been recovered, which is very, very constructive for this market. As someone who approaches this from a technical basis, and you know me, guys, I was not acting constructive on silver over the last year. Why am I acting constructive on it now is because we've finally seen this downtrend break. Okay, now I can hear some people saying, and we'll zoom it back out in a minute, but I can hear some people saying, well, you missed the bottom. And it's like, yeah, I may have missed the absolute bottom, but think about this in a perspective for a moment. Okay, we had silver bottom at 1450 here, and now we're at 1705. I started buying after I saw this downtrend line break here in the low 16s. So if I missed $1.50, and let's say this move is going to go to 21 or 25, or can we imagine it even goes to 50? I don't mind missing the first $1.50. The way that you think about that, if you're a technical-based investor or trader, the way that you think about the fact that you had to pay a slightly higher price than the bottom is that this was a business expense. Nothing more and nothing less. What was it a business expense of? It was a business expense of assurance, of the assurance that this downtrend was not going to continue. And for example, silver was going to round lower down to 12 or 11 or 10. Because that very well could have happened. If sellers had showed up here and we had rounded over toward the later part of this year, it would have been very wise. And so one of the things that one admits from a technical basis is that you can't know the full future. No one knows the future. What can we know? We can see when significant trends are broken and the confluence of significant trends are broken, and then we can make decisions based on that. So here we are, back above the long-term rising trend. What are some first targets for silver? And I will say first target only. Here's how we're going to do this. We have a confluence of resistance that silver should be approaching now over the next several weeks, perhaps 1 to 2 months. And that is going to be shown to you by the following levels. Notice the amplitude of the consolidation here below this breakdown point, and then the amplitude back up to this, the rejection point. Okay, this was a $2.36 amplitude. We add that onto the breakout point here, and we get a target up here just above $18.50. So this is a consolidation amplitude added onto the breakout point. So that gives us one target. Notice how that target corresponds almost precisely with these resistance levels going back to 2017 and 2016, just in this upper 1840s to 1860s region. Notice that. So these peaks right here corresponding to an independently derived target up here. Aha, there is one more level that corresponds with it. Notice, remember I talked about these Fibonacci retracements. Notice this one right here, the 61.8% Fibonacci retracement of the entire decline. So this entire decline, if we recover that 61.8%, corresponds right here just below 1850. So we have at least three independently derived targets that give us a confluence in this 1850 to 1860 region. And so this becomes an official target. In my book, this is what I am looking at as a technical-based analyst. Would I invest 100% of my money on this expectation alone? Of course not. You never want to do that with 100% of your capital, no matter how assured you are or how much you think that an outcome is going to happen. But we are talking about probabilities, and this becomes an official expectation. This target right here in the 1850 region looks very good for a first target only. So wouldn't it be interesting if here we are at 1705, wouldn't it be interesting if this market were to consolidate, perhaps retest this broken trend line, and then start to rise again, especially off of this new short-term trend line that began at the recent bottom in May, and that this market rounds its way back up to 1850 or 1860 within the next couple of months. This is what I expect. So I think there will be some nice moves from the trading standpoint. I think there will be some nice gains coming in the silver mining sector, just to let you know, based on this move alone. Now let's zoom it back out. That only gets us right up to here in the big picture of things. What happens after that? Well, again, I can't predict the future, but I can give you some probabilities. And I would say I suspect that the behavior around 1850 will be very telling for us. If silver blows through 1850, like there's no resistance there at all, maybe it only pauses there for a couple of weeks, consolidates, and keeps moving higher, the next set of targets comes in right here, 21.25 plus or minus a few cents. And of course, this corresponds exactly with the 2016 peak. This will be significant resistance because there were a lot of people who bought silver in here who will be looking to sell their silver when we get back here within the next 3 to 6 months. If silver can take out 21.25, so notice we do a lot of if-then statements. This is how I approach the markets. I like if-then statements. I don't like to have to give, a pie-in-the-sky target for 15 years down the road. I like to take the markets in chunks. It just feels better to me. If we can break $21.25, there is an extremely strong confluence of resistance right here. Black, black, and gray, representing this peak, the broken support going all the way back from 2011. You can see the multiple attempts here, and the 38.2% Fibonacci retracement level of this entire decline. That 38.2, all of these levels coming in here right between 25 and 26.50 or so. The 38.2 slightly higher, just above 27, but let's call it 25 to 26 to use some round numbers. This would be my highest expectation for silver on the present surge that we are seeing. And it certainly will not happen in a straight line. There will be some corrections along the way. This would be my highest expectation. And I would say that based on what I'm seeing in the market now, here is where I'm going to disagree with probably a lot of the other silver analysts who you will see out there, is that I believe, based on the signals that we are observing now in several cross-asset comparisons, the gold to silver ratio, when we study the behavior of the mining complex, when we study the behavior of the US dollar in the stock market, it looks to me like if silver gets up to one of these targets, this will represent an important multi-year peak. And that one would be wise to take profits or protective action, depending on their situation, perhaps within the next 6 to 12 to 18 months, depending on how quickly the silver market moves. So notice, I am skeptical that this is the beginning of a sustained bull market, but it does look very constructive for an intermediate term surge higher over the next 6 to 18 months. I suggest you get ready to capture that move. It could be quite dramatic. It could happen relatively quickly. Silver can move a few dollars in just a few weeks, and it's something like that I think is setting up here. So let's get ready for that. I want to remind you, if you're new to this channel, make sure you hit that red subscribe button somewhere down there on the channel so that you'll receive all the latest videos. I do want to let you know we have bought some silver miners here in our portfolio over just the last few weeks. If you would like to learn exactly which silver miners we are buying and all the research that goes into those decisions, as well as to see premium members-only videos just like this, there is a premium service called Precious Metals Intelligence, which comes out once a week, and all that information is provided for you right there, exactly the trades and the investments that we are making. And I will just tell you that this weekend coming up is our special monthly video update. It is the same format that you see right now, but much more in depth. We will also be covering gold. We will be covering the gold miners, the silver miners. We will be covering the bond market and the US dollar, and we will be looking at gold in foreign currencies, such as the British pound, the Australian dollar, and the Canadian dollar. So all that is coming this weekend. You can find more about that on the homepage. Finally, I just want to let you know that if you're an individual and you're new to the precious metals and you just feel a little bit overwhelmed, there's a lot of information out there, and you just want to speak to someone, that someone being me, I do consultations with individuals. I approach this from an independent standpoint. I don't take any fees from any of the companies, any of the mining companies, or any of the ETFs that we profile. I simply look out for the best interest of individual subscribers such as yourself. So I work with beginners all the way to advanced traders who are looking to diversify large portfolios within the precious metals sector. You can find more about that on the consultations tab on the homepage as well. So once again, look at this move in silver setting up. We were talking about this, remember, back to that July 11th video on the channel. It was the last time that we talked about silver. We were talking about some of the historical comparisons, and it looks like from a technical basis now on the intermediate term charts, we can see evidence that silver is getting ready for some kind of a move like that. The near simultaneous break of that long-term rising trend, the recovery of that, as well as the break of the primary 2.5-year downtrend, that blue line, that's a fairly significant signal. You don't see a 2.5-year downtrend broken every other week. Like I said, the last time we had something like that was the beginning of 2016, and remember that surge that developed. You know, silver moved almost $7 higher in the first 6 months of 2016. So something like that could be setting up right now. Will it be the beginning of a new bull market? We will look at that in a new video coming soon. Thank you for tuning in.